Hello and welcome to the status report overview of SKAGEN Kon-Tiki in July. Let's take a look at the highlights for the month. After a tough June when the fund fell 7.5% in absolute terms, it recovered some of its losses in July and was up over 3%, outperforming its benchmark which increased by 1.6%. 2 new positions were initiated during the month and we increased our holdings in 3 others. We exited completely from 5 companies. The Kon-Tiki portfolio is very attractively valued on both an absolute and relative basis, trading at a steep discount to the benchmark and its own historic average. Year to date, SKAGEN Kon-Tiki is up 5.5%, which is 7.6% ahead of the index on a relative basis. Now let's take a look at the month's largest contributors and detractors to performance. On the positive side, Hyundai Motor was the biggest winner. The Korean car company reported Q2 results in line with expectations, and with the fading headwinds of product recalls, labour issues and foreign exchange, coupled with solid earnings growth and a possible lift in the dividend, there could be a potential rebound in the share price. The discount for the preference shares that we own of around 55% is attractive, and we believe it could narrow further to between 30 and 35%, creating considerable upside. The second largest contributor was Bharti Airtel, with the Indian telecom company announcing solid results driven by higher domestic mobile prices. This was particularly encouraging as usage also increased despite the higher tariffs. Turning now to the debit side, and Samsung Electronics, the fund's largest holding at 7%, was the worst contributor. The Korean company announced Q2 results with strong semiconductor and display earnings, countering high costs in the mobile division as a result of its global launch of the Galaxy S4 telephone, channel expansion and R&D spending. Samsung's earnings are on track to meet our 2013 expectations, however, and with the company sitting on an increasingly large cash pile, we believe a strong dividend distribution is increasingly likely. Sabancı of Turkey and State Bank of India were the other largest drags on performance. We bought into State Bank of India on its share price weakness, however, as we believe the investment case remains intact. Now let's run through the portfolio composition and have a look at what's changed. We added 2 new positions to the portfolio in the form of low-cost polysilicon producers OCI Company and GCL Polyenergy. As well as State Bank of India, we increased our holdings in Kinnevik in order to grow the position towards our target size, and Haitong on share price weakness. We also increased our existing position in Satyam Computer Services. Now the merger with Tech Mahindra has finally been approved, the company will become the 5th largest IT services company in India with a more diversified business mix. On the sell side, we sold the remainder of our shares in ENRC and Farm Standard after disappointing corporate governance developments in the 2 companies, and we sold Park Electric and China Ting to fund other ideas. Hamney Farm was also sold out after it delivered good returns. Finally, a quick look at the fund's top 10 holdings, which together represent 43% of the portfolio, and we can see how attractive current valuations are. The companies trade at a weighted 2013 price-earnings multiple of 5.7 times, which is at a considerable discount to the index, and we believe there to be around 50% upside based on current target prices. That's it for this month. Thank you for watching, and for more information, please visit the SKAGEN Kon-Tiki section of the SKAGEN website.